Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every day. In this daily video, I provide my opinion and insights of current market trends, market volatility, market timing, and hedge risk levels for the upcoming day for the U.S. financial markets. It is 6:32 a.m. Central, and I am recording this in preparation for market day, January the 9th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So we've got a lot of changes today, so let's dive right into the action. First of all, note in the overnight that very quiet action across all of our broad market indices, probably waiting for the monthly unemployment report, one of the most important macroeconomic reports, and also one of the most unpredictable in terms of their ability to forecast what that number will be prior to its release. So markets tend to go very flat, very quiet prior to this report. Report, of course, will be out prior to the cash open of the market, so we will know those answers. Notice also that in the other markets, crude, gold, even euro, also relatively quiet. So very quiet evening last night, even in the overseas markets such as China, Hong Kong, Germany, also relatively quiet night. So after a couple big days of overnight action, that was not the case last night. Pretty quiet all the way around. In terms of macroeconomic reports coming into today for the United States, obviously the big one, the unemployment report. But other than that, really not much happening. And once the cash market opens up, it really is pretty much all clear for the macroeconomic reports influencing any significant changes to the marketplace. In terms of our current volatility trends, a couple things to take note here. First of all, note that our difference between the open and the average high and the open and the average low is just about equalized here. So this has certainly not been the case until just recently. We'd had quite a bit more downside than upside. It was much more lopsided. We're now looking at much more even between the two. So a change there. Also note that our short-term VIX has fallen significantly as a percent. This is a big drop. It's now at 15.04 on the short-term VIX, so really falling off. And indeed, if you look at the historical IV percentiles, really falling off across all four of the broad market indices. In fact, the S&P has dropped into the lower third of that range. So very, very quick drop of volatility, fear being taken out of the pricing models. So that should be telling you something there as well. Now, we've had a continuation of significant move days, and of course with yesterday, big move in the overnight, but then a continuation during the cash market. We had a 2 standard deviation move or greater in 3 of the 4 broad market indices. We now have had 6 days in a row with the S&P at greater than a 1 standard deviation move. So pretty significant return of volatility in terms of range coming back into the market since right around the new year. And in terms of our market timing models, a lot of changes took place here today. Notice we still are phase 3, bull flag, bull flat, higher highs, and now a higher low. Very important. And indeed, we'll take a quick look at the chart. This is the S&P futures chart. But note that, and we've been talking a little bit about these V bottoms. I mean, this is not the norm, but we've had certainly, really, you could go back to this one right here, you know, pretty fast drop off, which is pretty typical, but then this quick recovery, very dramatic fall off here, but then look at this, within really this about the same number of days you recovered this great big drop off. Sharp drop off, 2 days. This was very frustrating for many traders who would see their positions get stopped out just to have it recover virtually 80% of the drop in 2 trading days. And certainly for most people, their timing signals did not give them the all clear to be back in that fast. And then by the time they get the all clear, whoosh, back it goes down again into another V bottom. So from a technical standpoint, this is still very bullish, and we have a higher low. So everything is kind of now all clear once again. But again, you have in even only 2 trading days significant retracements of the prior fall. So very difficult circumstances for many traders' systems at this time. But as a result of this dramatic action, we are back to our confirmed uptrend in our portfolio trader posture, and indeed in our active trader market posture. Both short-term and intermediate-term bullish trades are now okay. Obviously, we've just rolled up in this new status, so you might want to consider position sizing. But from the position sizing models, the models now tell us, both from the portfolio trader as well as from a volatility metric, that it is okay to be 75 to 100% of full position size. So very quick reversal here on a number of these metrics. Our market timing opinion for today: short term neutral, 3-day neutral. The 2-week is bullish. So obviously these were very bullish here for the last couple days. Was the call coming in, and we certainly got that, but now an awful lot of that edge has ebbed off. Now our market forecast opinion was borderline bullish. NASDAQ is still very bearish, and you notice on our intermediate term trend lines, we're just barely above the 50 line, which is a very important center line for us on this indicator. And the other piece to this is it was now turned up, so we have an upward turned line combined with an over 50. That makes us bullish, but we are just barely so. So if any kind of weakness today could just basically invalidate so much of what has changed between yesterday and today. You also see in the other indices, the Dow, the Russell, kind of similar circumstances. The Dow had an upturned line. The Russell was still downturned, so that makes it a bearish posture. NASDAQ is still very bearish. So very mixed, really. Our primary opinion is influenced by the S&P, and it tells us borderline bullish, though. So that's what gives us our overall rating. Notice on the hedge warning status, we have come down a notch, and we're now at normal status, threshold level 0. I did put a plus on this, so while we went from 1 plus to 0 plus, we are in a confirmed uptrend. All of our volatility metrics are generally positive, or at least without warning signs. Primary warning and the primary reasons for my giving this a 0 plus instead of just a normal 0 is that we still have the NASDAQ very much lagging the action on the S&P 500, and this is not good. We normally like to see the NASDAQ leading the S&P for strong bull markets, and then of course the fact that our market posture was barely bullish. So a couple things there to kind of elevate our status to a half notch to a 0 plus. Volatility clearly is trending down now, and really has gotten crushed ever since we got this VIX spike bullish signal fire. It has dramatically fallen off from that. That was our most aggressive early sign that the bottom might be in. And it certainly worked to perfection this time. It was our first early warning that the things may be turning. But the VIX clearly is trending down, and our option income strategy call The VIX is now within the volatility window, so and this is actually the second day, so it is conducive to option income strategies. You might want to start considering dipping your toe back in. Again, position sizing might be warranted to be a bit more cautious than your norms, given that we've just rolled into this window, but that change has come into play. In terms of some sector analysis, couple important things to note here. Obviously, greatly improved market postures across all three time frames: short, intermediate, and long term. But knows who's doing well and who's not doing well. You've got to be very, very focused into which sectors are the performers and which are not. Indeed, as a percent change, look at who's at the top here. Healthcare held up very well during the pullback, and it's the first one to charge up in a big way. Consumer staples and consumer discretionary also in general holding up pretty well and are roaring back with the strongest returns, whereas energy, just barely above the zero line, even though we had a great big up day. And then of course telecom, up here we have telecom down, neutral, and it was still down yesterday. So be very aware of where the institutions are willing to protect, where they're willing to still invest, where do they rush in first, where do they hold up the best during pullbacks, and that certainly right now is healthcare and consumer staples for sure. And indeed, here's our index benchmark. Only 3 of these in that big up day actually outperform just investing in the SPX or SPY. Look at those financials. Financials need to lead. So, that's another warning sign. We look for NASDAQ to lead the S&P. We look for financials to lead the S&P for strong bull market. So a bit concerning that the financials were not performing better than this. And it's, so not a perfect call to say all clear by any measure. A couple warning signs out there. Top industry groups: retail, railroads, healthcare, transportation, internet continue to be our top 5. So no change in the top 5 composition, though they reorder themselves a little bit from day to day. And as always, we greatly appreciate you liking us on your favorite social media platform. You should find us represented just about anything that you might be using. But certainly Facebook would be the place to leave comments or to send emails to support@falconglobaltraders.com. Of course, more information about any of our products and services can be found at the website falconglobaltraders.com. And as always, 2-week free trials are available in any of our 3 live trading rooms: futures for the day traders, and for stock traders, the equities and ETFs room, and of course options is our 3rd room. Here's your disclaimers. If you'd like to read this at your leisure, just hit the pause button. And as always, we thank you for sharing with our Falcon community every single day. Good luck and good trading.